If you're in Berlin on October 5th, don't forget to check out Blockchain for Africa. Get your ticket at www.blockchainforafrica.org. Now on with the show.
This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome, everyone, to Analysis in Chains. I'm Nathan Williams. Joining me today is John Wu. No, not the director. We've got John Wu, the CEO of the Digital Assets Group at Sharespost. John has a background in financial management and investment in technology. He used to work at Tiger Management, then Kingdon Capital, and he had his own firm that was funded by Blackstone. He's got extensive experience into these financial markets and how they approach crypto, and we're going to chat about that today. John, thank you so much for joining me.
Nathan, it's a pleasure. Thank you.
Tell me a little bit about what Sharespost is doing.
Sure. Well, let me give you a quick summary of Sharespost, the parent company. Sharespost, the parent company, has been around for 9 years. It's the largest marketplace for private securities. Those today are Lyft, Uber, Airbnb. And it has compliant licenses for broker-dealers as well as the alternative trading systems. We at the Digital Assets Group inside of Sharespost, we're taking those compliance and governance expertise and regulatory know-how and creating basically a security token marketplace and a security token network to help clear and settlement of security tokens for other exchanges as well.
So you guys are really leading the way in terms of getting institutional investors ready for the crypto revolution.
Yeah, I would definitely say that. I think if we look at the asset prices in 2017, the reason why we had that big move in the back half of 2017, in a broad perspective, was really for two reasons. One was the technology promises, such as scaling, leading to more applications. And the other was the thought that there would be a huge capital inflow from all of these institutions, which represent far more AUM than the existing base of crypto investors.
Forgive me, AUM?
Assets under management.
Gotcha.
So
thank you.
Large firms like Fidelity, they have $7 to $10 trillion worth of money that potentially, if they ever wanted to invest or allowed their clients to invest in crypto, it would be a massive move. So that's why we had the spike in asset prices.
Yeah, that makes sense. I think, what is it, 100 billion or 200 billion that's stored in Bitcoin right now, and that's the largest?
That's right. But before all that can happen, the rails would have to be built for, and the infrastructure needs to be built for all of these professional, traditional financial services companies to allow their clients or for them to get more involved. And what I mean by that is institutions need to see proper custodian solutions. They need to see better understanding in the regulatory landscape, and they need to see proper settlement and transfer agents. And they also need to see a liquidity platform where they can source the liquidity they need to service that gigantic pool of capital.
What sort of custodial solutions would you imagine would be required? I mean, it's been an issue. You've got right now Bitcoin millionaires sitting with maybe 50,000 Bitcoin just in a USB key sitting on their desk, or maybe if you're lucky, in a safe or in a vault. And that's just not going to cut it for the big institutions.
For the institutions, the custodian solutions they want to see have to be similar to the existing custodial solutions they have for traditional securities. They need to have, in addition to that, they need to know that the security on the tokens or the crypto assets are, from a technical perspective, very secure. So the things that they're looking at are proper compliant custodian solutions, either through a trust bank or a broker-dealer solution. They also want to know that there is possibly insurance, so that if things get lost, in the traditional world, you have firms like AIG and other insurance providers that can step in and protect clients' money. In this world, they're still working with the insurance providers to figure out if they can provide and what's the amount of insurance that they can provide.
You mentioned the need for liquidity. And it's funny that when I think of the spike of 2017, I think of the issue of a lack of liquidity, at least in the Bitcoin market, if not in others. I think I remember seeing something like 40% of Bitcoin is completely inaccessible because it's either been lost or frozen or someone forgot their keys or
Right. So that was actually for 2017. A lot of the liquidity you're referencing are either for the cryptocurrencies like Bitcoin or Ethereum, the underlying protocols. On top of that, there was lack of liquidity probably in the ICO world with the tokens, the utility tokens. The liquidity I'm referring to going forward is if these traditional financial institutions want to get involved, they want to see a security. And to create these security tokens, there needs to be new marketplaces created. Sharespost is one of the places trying to incentivize the investors to help invest in this space by creating this marketplace where issuers who are doing security tokens can land in our platform and then invite buyers from the traditional world, as well as from the family offices and accredited investors to come in and buy these security tokens. So it begins somewhere, and there's us and a few other firms that are trying to create this marketplace.
So tell me a little bit about this marketplace that you're trying to create. I mean, what's the main difference between, say, the New York Stock Exchange and what Sharespost is building?
So the New York Stock Exchange actually is an exchange where companies come and IPO and list on the exchange. I would say the security token marketplaces going forward are somewhere between the private placement and a New York Stock Exchange where you have a post-IPO event. A lot of the companies that will be doing security tokens are going to replace their private placement activity, but they want more liquidity than the private placement market offers. So the security token place will be somewhat of an in-between step, in my opinion, between private market placements as well as and the traditional IPO exchanges.
And when we're talking about security tokens, you know, we normally think of securities as being shares or bonds or other financial instruments of large publicly traded entities, ones that have tens to hundreds of millions to billions of dollars at their disposal and very expensive MBAs sitting there doing their analysis and making sure that things are traded properly. Are you imagining for the security token market that will be created that it will be more for these larger style entities, or are you imagining it being something that would also be open to the startups that are trying to get the next big thing off the ground?
It's a combination. The answer is a combination. If you look at 2017, between the private placement raised by startup companies and IPO proceeds around the world, which will presumably be larger companies, there was over $300 billion raised. And like I said before, the security token marketplace will be taking a share of both of those markets. And if we can, and I believe in 5 years from now, we can take 10% of that. And if we take 10% of that market share, we're going to have, 3 or 4 or 5 times bigger than what we had in the utility token marketplace in 2017.
So do you think that'll spell the end for the utility token? Or
I think it will be a parallel track. There will be tokens raised under the utility, and there will be tokens or security tokens. And it all depends on the use case. There will be true utility use cases, but yet others that are not true utility use cases, they will go through the security token route. It will be an additional distribution channel for companies to raise money in addition to private placement or going public.
A few weeks ago, we had the CEO of Dash on our show, and he also came from a financial services background. So the same question I asked him, I'd like to ask to you. You come from a financial services background. What brought you to get involved with crypto?
So I think Ryan and I both were on the buy side in hedge fund capacity. I was investing in technology companies for various hedge funds that you named earlier. And for me, it was very simple. I've been a technology investor for a long time, always looking at emerging technologies. When I first started looking at crypto and investing in crypto, I realized a very simple thing, that this was so nascent that if I did my research and work, I thought I had a competitive advantage over someone else who was not looking at it. And the more I dug into it, the deeper I got, the more I realized that this technology that I was looking at, that I was investing at, was really growing. The underlying metric was just growing at a ridiculously fast pace. So once I started investing in it, and truth be told, once you have some success in anything, you get more enthralled with it. But the more you invest in it, the more passionate you get about it. And I think Ryan said the same thing. He became very passionate about this space as well.
He became
and I think
invested.
both of us, we both very much fell down this rabbit hole, if you will.
How do you imagine the financial markets and the traditional financial entities are going to respond to this in both the near and the short, the near term and the medium term?
I think in the near term, a lot of the financial investors are looking at this in terms of how they can marry this into their portfolio construct. The typical portfolio manager in investing wants, not just returns, but they want some sort of Sharpe ratio in terms of volatility management in terms of their returns, as well as lack of correlation. And for now, at least in this space, it has been a holy grail in terms of it's been uncorrelated. And if you throw the right amount of volatility into your portfolio, you can actually create a volatility mix where your returns are high enough and the Sharpe ratio is far better than if you did not have this involved, this asset class involved. And that's part of the reason why traditional professional investors have been interested in this. To everyone else, obviously, when you have such a spike in prices, it just draws the eye and everyone wants to at least sample it and taste it.
Have you seen any of the larger funds take the leap and stick their toe in the crypto water yet? Or has it all been individuals that just happen to work at these big funds?
Well, right now it's the latter. There are a few exceptions, but generally speaking, it's been professionals at these funds who've gone down the rabbit hole, if you will, and gotten very interested and started investing on their own. The reason why they can't get their funds involved is exactly what we talked about earlier. There needs to be a level of regulation that they can understand, clarity. There needs to be solutions and infrastructure such as the custody again and proper transfer and settlement of these assets. So they're waiting for that.
Now, when we're talking about regulation, it's such a hot topic among the crypto scene. What jurisdiction is going to have the clearest regulation? How do I conduct my my token sale or my crypto project or my blockchain project with the maximum assurance that I'm not going to jail anytime soon? What jurisdictions would you say are the most interesting with the regulatory development right now?
That's a great question. Obviously, the SEC in the U.S. is leading the charge, but the jurisdiction is and the rules for every geography are actually different, and that makes this kind of hard because you cannot. Crypto is a global asset class, and yet if each jurisdiction has its own rules, how do you deal with that? One of the solutions we have at Sharespost, we hope will address this, is what we call the GLASS network, the Global Liquidity and Settlement System. It is a decentralized B2B clearing and settlement network for security token trades among exchanges globally. And we hope with our decentralized settlement network, it'll solve a couple of problems such as the compliance gap within every jurisdiction and ultimately the liquidity gap in these security tokens.
Now, you say you're doing this this GLASS system to decentralize settlement between large exchanges, right? Why?
So it's not to decentralize settlement and clearing, to clarify.
Okay.
It's actually the network itself is decentralized because the nature of the rules within each geography is that different. So the easiest way to do that would be to bring all the settlement providers all over the world into one network and allow the exchanges to do what they're great at, which is aggregating customers and volume, and allow the details of a trade to go into the system and let the trade itself be settled in a compliant way. And instead of having every exchange out there going after licenses in all the jurisdictions that trade crypto.
when you're looking at security tokens, there has been mixed messages in the market as to the level of optimism. A lot of people have been really excited because there's so much money, institutional money, that is poised to enter the market once security tokens are ready. And then at the same time, there's sort of been a skepticism saying that maybe this is still a long way off. What is your sense of the current market sentiment?
Well, I think if you look at the players involved, there are two types of players. There are existing financial institutions and there are crypto native institutions. If you look at the number of players involved, everyone is very excited. I mean, we have Fidelity out there stating that they plan to launch crypto related products by the end of this year or early next year. Goldman Sachs is out there saying that they will be opening a crypto trading desk at some point. BlackRock's been out there saying they've created working groups. Morgan Stanley said that they are going to offer their clients BTC swaps. I mean, NASDAQ is rumored to offer a lot of crypto analytics. Bank of America is, filing patents for cryptocurrency custody. Citigroup is rumored to be creating an ADR for crypto. And obviously ICE with their back is out there as well most recently, and releasing a physical delivery of Bitcoin futures contract. Then that's one group of people. So if you listen to that noise level, it is up and down, but generally the noise goes higher over time. Then you have ourselves, you have Coinbase, you have raw startups like Harbor, Securitize, Securrency, BitGo, all of these crypto native entrepreneurs also trying to solve similar problems in this infrastructure supply chain we need to figure out for security tokens. So based on the players in the game, it's quite obvious that everyone is very excited about the future of security tokens.
So the hype is real. You know what they say, in a gold rush, you want to be the one selling shovels. What is the shovel for the security token?
It is, again, the infrastructure that we talked about for now. It is the people who can come up with the best custody solution and fast enough, the people who can do the transfer and settlement of these security tokens, the people who can come up with the marketplace, and the people who can actually explain the regulation or interpret the regulation properly and work with the SEC. Those are really the picks and shovels. Ultimately, it's going to also be the issuers. There needs to be a great application for a security token that makes sense, that is somewhat better than a private placement, but and also more liquid than a private placement would do. And then you need buyers for this. And I think once you have a great issuer, the buyers will come.
So with all of this, what can we expect from Sharespost in the next couple of quarters?
I think this is a very exciting time for Sharespost. We are very focused on two things. We are focused on bringing liquidity to the security token marketplace in the US in our Sharespost marketplace. We're also very excited about our Glass network, again, the decentralized B2B clearing and settlement network for security tokens. As we get these two products out there, those are part of the picks and axes and tools that you talked about. We're also excited about our partners who are addressing the custody issues and our friends who are also addressing the settlement and transfer issues related to doing things in a compliant way in the security token world. A lot of these companies have made great strides in 2018. A lot of the issuers have raised money in a security token manner and will probably be ready to list in the back half of 18 or early 2019. So I look at 2019 as a very good year for security tokens.
Thank you very much for joining me, John. John Wu, the CEO of Sharespost's Digital Assets Group, and we've got a lot to look forward to for security tokens.
Thank you, Nathan.